All right, 3-3 work together here. Again, like we have in the past, we'll zoom in a little bit. We have our chart of accounts. Again, if you ever want to use it, it's here, telling you Norma Dirks, accounts payable. This is a liability. When we buy things on account, we will pay them later. This is accounts receivable, the asset that we increase when we sold services on account. We would debit accounts receivable because we receive cash later, and then we credit sales. So these are examples of our previous two work togethers. And so now we're on transactions for the third section in this chapter. April 12th, again, we don't have to write the month, so for the first line, we have paid cash for rent. So what we'll do is we write rent expense. The source document is C4. We are debiting the expense for $650 and we're crediting cash for $650. We will do that system for all expenses. Debit the expense, which increases the expense. The normal balance of expense is a debit. It lowers owner's equity. And whenever you see paid cash and C4 as the source document, we know we're lowering cash. Receive cash from sales on the 13th. Now this is not going to have an account title. Why again? Because we're not putting anything in the general. We receive cash. We know we're debiting cash for $2,500, and it's a sale because it's from our cash register tape, which happened on the 13th. So we use the source document T13. Usually we would put a check mark here, but they're not asking us to do that right now. Why don't we have an account title here? We need to choose it. I didn't put it in there. So you choose it with that arrow. So if it's not there, you click and it'll show you. Why do we have a check mark again? Because there's nothing in the general debit or credit. Whatever's in the general debit or credit is listed here. But since they're using the special amount columns, we don't have anything there. On the 14th, we sold services on account. So we do accounts receivable dash case spa. Excuse me. We sold services on account. Nothing to do with cash. There's no check. It's a sales slip. We're not receiving cash in this one, excuse me. We sold services on account. Accounts receivable is the asset being used. We will receive cash later. So we put a debit for $480, and that's an increase in the owner's equity account sales. On the 19th, we are paying a bill, utilities expense, which is the electric bill. If you went here and you're like, which one is it? You go to the chart account and it says utilities. So we have utilities expense. It's a check, number 5, in the order that we wrote these checks. We debit the expense just like rent expense. So it's going to mirror rent expense. When you write a check, you credit cash. All checks are crediting cash. So we increase the expense, decrease cash. On the 20th, we have received cash from K-Spa. So before, we know we sold services on account. He charged $480 to us, so we knew we were going to receive cash later. Well, now we have accounts receivable K-Spa, and we know it's a receipt, and it's the second one, and we know we receive cash, and we know we have to debit cash for $255. What's that do? It lowers the bill. They owed us $480. Now we have to debit, or no, credit, excuse me, that to take that bill off. So if there's a T account, it would have $480 as a debit, $255 as a credit, and then you'd have a new balance of $225 or whatever. But this credit lowers accounts receivable, their bill they owe us. And whenever you get a receipt there, you know your cash debit. 21st, pay cash to owner for withdrawal. Remember, it's Norma Dirks, not capital, sorry, I screwed you up, drawing, and again, what was Norma Dirks? This is the example when we had her credit the capital. Now we're debiting the owner's drawing account. Pay cash owner for withdrawal of equity. It could say withdrew equity in the form of cash. We know with the check number that we will have to credit cash, and drawing is an owner's equity account that lowers owner's equity and has a normal balance of a debit.